Good afternoon, traders, and welcome to another After Hours with Bereez. Today was a mid-cap Nifty expiry, and the problems that we have with any low float security is what we had today. Uh, well, we opened somewhere around 9,075, so that would be at the money strike, and from there we went down by 75 points. Yeah, no more than that, in fact. We corrected by 100 points and then we rallied by 230 points and finally we settled at 9,175. Now the title of the video is mispricing of risk, and I think the best way to explain it is the at the money option premium which was there in the morning. In the morning, as you can see, 90 at 9:15 the premium was around 34 rupees. Consider it as 30 rupees. And that is what the risk was being priced in, because today was of course the expiry. So in the morning, options market said the market will either go 30 points up or 30 points down. Considering 9075 as the strike price, that would mean 5 points above 9100, so 9105 on the upside, and I think 9055 on the downside. That was the, not 9055, 9045 on the downside. That was the risk being priced in. What did happen? Well, as you can see in this chart, don't worry, all these blue lines are just the strike prices that mid-cap Nifty trades in. We started from 9075, we corrected by 1, 2, 3, 4, we went down by 4 strike prices. Then from there we went up by 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So we essentially crossed 12 strike prices. That means an implied movement of roughly 250 to 300 points, which was of course not being priced in. The red channel that you can see here is the 30-point channel either side. So this is where the index was expected to trade in. For most of the trading session, it has traded outside it. So for the first half of the day, it traded below it. In the second half, it traded above it. A lot of options which were trading for 75 paisa, 1 rupee, 1.5 rupees, 2 rupees, shot up by 20x, 30x. There are options which went from 1 rupee to 60 rupees on put side. Calls went from 1 rupee to 60 rupees as well. So overall, for an option seller, this is absolutely not the market to be in, because by shorting options, we are saying that the risk is risk is overpriced in the market. What market has shown is currently risk is really underpriced. The kind of risk that traders are taking is really high, considering the kind of premiums that are there in the market. And as the market dynamic changes, as multiple expiries open up, a lot of new systems will come into play, where people trade across expiries. So hedging, selling in one, buying in another, and vice versa. And all this all this added to an index like mid-cap Nifty, which in itself is a very comparatively smaller index. We are used to seeing very large moves in larger index. So on a bad day, this index can give a much sharper movements owing to a small float. So yeah, if you are if you are a short vol trader, if you are a non-directional trader, now is the time to be really cautious, making sure you are getting paid enough in terms of premiums to assume any sort of risk at all. You can modify your strategies to purely directional. You can add long gamma components. You can turn into an option buyer. I don't mean it in a derogatory way, which many option sellers do. But now is the time to adapt to the market. A lot of stock options are decently priced now. If you see, though liquidity is a little low, but the pricing is good. So that is one avenue where you can explore. Positional trades, well, a lot of traders are saying that positional trading might be the way to go. But you can see, even for tomorrow's expiry of Fin Nifty, we are getting less than 100 rupees premium at the money. And I am almost certain it will be a small gap followed by a directional day tomorrow. I won't be able to trade, that's a different thing. But once again, really low premiums. an index which is really close to 20,000, we are getting less premiums than when index was around 13,000, 14,000. You can check other traders videos. So owing to all that, yes, market is really not pricing risk enough. For option sellers, it is a time to be cautious. So thanks for tuning into After Hours with Bereez. We'll meet again soon.